What's up, everybody? Welcome back to Earn It, Save It, Invest It. This is my week 38 of my $100,000 challenge. So I'm just going to go over quickly my portfolio, what I think is going to happen in the market, as well as HIMS. They're going to be announcing on Monday, which is tomorrow. I'm recording on a Sunday night, so it's a little bit later than what I usually like to do, but still, HIMS is going to be announcing their earnings. Probably by the time you see this, HIMS will have already announced their earnings. I'm going to kind of go over what to expect and all that stuff, but I'm also going to put out another video about HIMS earnings after the actual earnings. But so this is more about the portfolio and what I've done over the last what I'm trying to do to grow that $100,000 challenge. So if you can, please give a like and subscribe. And let's just get into it. So these are my, here we go, by weight. So this is my account. I'm at $7,752.60, right here. So that's not too good. If you know, I started off with 7,354. So I'll kind of go over my performance. Highest is TQQQ, the most weighted. Then we have Celsius, Meta, HIMS, Amazon, Nike, Adobe, Fubo, The Trade Desk, Hasai, and Oddity. I am planning on adding on more Adobe, Trade Desk, and Oddity. Oddity has now turned positive for me. It is now about 6% positive, so that's good. And it went up 5% on Friday, so I mean, that was a big chunk of it. I still want this thing to kind of stay a little bit low right now because I want to start building this position. I only have 4 shares. It's nothing. The Trade Desk, I'm down 25%. Adobe, I'm down 18%. So those I can continue to build with confidence, knowing I'm still going to be getting a good price, and I feel good. I still feel good about Oddity, where the price is, but so those are the ones I'm going to be building on mostly. $100,000 challenge, week 38. My goal was to be at $10,430. I am not there, right? I was up 3% for the week, which is good. Against the goal, I'm about 25% off and negative, so that's not good. HIMS destroyed my portfolio. I called it from the very beginning, and I'll stress it probably every single time until HIMS starts to perform well again. HIMS, I knew was going to drag down my portfolio. I started this challenge when HIMS was at 50, and I said it right away. It's kind of dangerous trying to do with it, but I just wanted to do it. That's where my portfolio was at the time, and so I just did it, right? June 2nd, since June 2nd, I'm up 5%, but if we're taking out all my $50 deposits, I'm actually down 23%. So those deposits matter, right? And I did add an extra $200 last week because the market has been showing some weakness, especially in some of these stocks I really want to buy. So I added an extra $200 that I did put on there, and it is calculated into all of this, of course. So again, these deposits, they really do, they show, because even though I may be down, if I'm buying stocks and they kind of go down, they don't go anywhere, other parts of my, like HIMS, I didn't really put any more money into it. My portfolio was where it was. So all the money I've added into the portfolio hasn't gone down. It's not really a part of the reason why it's gone down. It's going into stocks that have gone up, but because HIMS has gone down so much, it's really dragged my portfolio down. AAII Sentiment Investor Survey, right? So we're going to see what the bulls and the bears, what the numbers are like. Right now, a lot more neutral, right? We're at 28.5. That's up 5%. We went a little bit down for both. Both of the bulls and the bears kind of jumped in the middle. So now we're kind of like, all right, what's going on right here? Oops. Week's special question: how do you prefer companies to return cash to shareholders? Most people say I like companies to use both dividends and buybacks, and that was 41%. Then we have 37% prefer dividends, and then 12% is stock buyback. So obviously dividends is more of the preferred way for the companies to give back the cash to the shareholders. We're still stuck in fear. A week ago we were in fear. A month ago we were in neutral. And a year ago we were in fear. So we are still here in this fear zone, which is good. I'm okay with being I'm okay with buying here, right? This is where I don't like to buy as much. I like to buy in these times because this is when you're going to find good prices, right? There's a lot, like the Mag 7 is down pretty, not like significantly like a crash or a correction or anything, but they are just not performing. They are in the negative for the year to date. They just, some of them have just over the last year and a half haven't performed at all very well. So even though the stock market has it's still been able to keep up, the big dogs in the market have not done their usual performance. So right now we're still kind of stuck in the fear, of course, geopolitical and all that stuff. This is a year of midterms, so it's going to be interesting. We're still kind of in earnings seasons. So, of course, Monday, you have to know, right? Hims and hers, that's the big one. I'm going to be watching that, hearing that, listening. It's going to be all on my mind, and I'm going to be making a video tomorrow for sure about it. Then we have Tuesday. What do we have here? Workday. I use that I work at Fox Sports, and we use Workday. Salesforce is actually a stock I have been really considering getting into, and I might get $50 to $100 worth of Salesforce before earnings. That way I just have a piece, because even if it goes down, I still think Salesforce is at a good price right now. So Salesforce is a new stock I've been really considering adding on. So I'm going to do a little bit more research on the numbers and stuff, but Salesforce is seemingly really I'm really interested into it, so I might buy a little bit of that. And then Celsius as well. That's a big I own a lot more in another portfolio. I bought it at like 25 or something like that. It was almost at the bottom. So I'm big into Celsius, so I'm going to be watching Celsius as well. And I think that's about it for at least the ones. I guess you could look at Warner Brothers, because Netflix just bought Warner Brothers, so that's going to be, they'll be able to talk a little bit about that. Oh, I'm just going to skip over everybody, right? On the trade desk, obviously, that's also my stock. But Nvidia, I'm just going to skip over my own right here, and then that is ridiculous, right? But Nvidia is going to be doing their earnings on Wednesday, trade desk. And yeah, there's a couple more in here that some of you might, Duolingo or something. There's some pretty big stocks that are going to be doing their earnings next week. Over this last week, I've had a pretty green week, I would say, right? This looks pretty green overall. There's a few that are in the red. Health technology took a dip. Okay, like the consumers and health, those were a little bit more green the other week. Retail also doesn't look too hot. It looks kind of half and half. I mean, it looks a little bit more half and half. Obviously, this electronic technology looks good. Finance, like we have to remember it's the S&P 500. Can you even see it? Yeah, S&P 500. So, it was kind of a mixed bag, a little bit more green. And then Hims, right? This is Hims. This is the stock. 75% down within 6 months. It has just been on a tear. I said, you should buy here, and this was at this time of when it was crashing. I was correct at the time if you were more of a trader, right? If you wanted to trade this thing. And I think even as an investor, but if you would have bought back then, you'd been down 50% as of today somewhere, right? If you, maybe not right here, but if you had bought up here, you'd be down 50% or something. So, and same thing was over here when it started to crash. I said, hey, this might be a good time to get in, but then the whole Wegovy thing happened and the lawsuit, that even happened more over here. As you can see, it continued to crash, and that just cratered it. So, for Hims and the earnings, let me go to Hims really quick. I think the biggest thing to expect out of Hims is going to be what's happening with the lawsuit. What do they feel? Like, obviously, there's only going to be so much that they can really speak on. At the same time, maybe someone doesn't say anything about the lawsuit, right? If you want to ask about the compounding process in the legal way, ramifications and stuff, just ask about the compound. Just try to find a way to ask the question so you're just asking about how the business operates rather than trying to say, give me information that's happening inside the lawsuit, right? Because you're still allowed to ask the CEO what's going on with the business even if they're in a lawsuit. Like, that would be ridiculous. But you can't say, is this what they're trying to say? You know what I mean? You got to try to get, hey, okay, so, the operating process is, let me just go to, the operating process is we use 503A, and that's part of the, the law, so we're using it, and I don't know exactly what they're going to say. I don't know what questions are going to come out, and that's what's interesting, right? I don't know. I don't know if they're going to have any real big answers for us. Financially, it's going to be interesting to see what they guide. I think it's going to be pretty clear of what they're going to bring in. I think analysts have it pretty good. I don't think they're going to miss, but I wonder how their estimates are going to be, right? Their guide, because that's going to somewhat tell us about the lawsuit, because they have the lawsuit coming up and they're going to have to guide out, and they're going to, right? They have to have some kind of, like, they're going to, are you going to guide compounding? Is your 2026 going to include compound? I guess that's the biggest one, right? If their 2026 guide still includes the compounding GLP-1, then I think we know exactly where HIMSS is going. They're saying we're not going to stop, even throughout the lawsuit, and we feel confident that we're going to win because we're not stopping. Because if they continue to go and then they get found guilty, that would be it could be really harsh on them. So I don't think HIMSS is going to lose on the compounding part. So what we're really looking for in the 2026 HIMSS earnings is not as much of what happened in 2025, it's what's going to happen in 2026. If their guide includes GLP-1, the compounding of GLP-1, that's pretty big. If it doesn't, I actually think if it doesn't include that, then that is like, you said you were guilty, right? You're now going to say we don't want to be guilty anymore. We're going to limit our our consequences and stuff like that. So that's what I'm looking forward to the most, is will HIMSS guide 2026 with the compounding of GLP-1? That's all we're looking for. If they are, then they feel confident in their lawsuit and they're going to continue to make money. But we also have to understand that does mean the lawsuit is going to possibly come at a head, right? Because they're saying we're not going to stop. If they do stop, then that means, hey, they're going to lose. They're not going to be making a lot of money. Clearly, they lost to Novo, or they feel unconfident with it, right? And that would be really bad. So obviously, I'd rather see them guide with the GLP-1, and I think they will. And I hope I'm sure there's going to be plenty of questions thrown out about GLP-1, compounding, and the lawsuit, this and that. I'm sure there'll be a few answers if we can't answer that, maybe, But I think that's what the number one thing we're looking for. And so, yeah, this is all I really have to say. It's been exhausting. I had a few days off. I took a little trip, and so yeah, I am pretty beat. It is Sunday, but it's about to be Monday morning, right? So you can imagine what time it is. I'm on the West Coast though, so most people that see this will be watching it already on Monday. But earnings comes out, and I will be making a video about it. So yeah, when it comes to the stock market, always be aware and be prepared. Don't be scared, because if you are aware and prepared, when the stock market drops, you're prepared. You just start picking up cheap stuff, and then you walk away. You don't got to be scared. So yeah, thank you for watching, and never forget to earn it. Save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.